Hi, when you look at ZIM and see this huge dividend of around 100% and a P ratio about zero point 0.5, you will say, wow, this is value. But don't rush. If you look at the stock price, you can see that has declined by over 70% from its peak. And this happened for a reason, not because the market doesn't know anything about ZIM. But you may also say that ZIM has great assets. Their total assets are about 11.6 billion and their total liabilities are about 5.7 billion. So their total equity is around 5.8 billion. Compare that to their market cap of about 2 billion. You will say, I can double my money easily. But it's not that easy. Because if you look at their assets, most of them are in vessels, about 4.4 billion, and containers, about 1.2 billion. So in total, 5.6 billion. But those vessels are chartered or rented. A large part of them, about 125. And ZIM has in total 149. So ZIM owns only 9 vessels, not 149. You see those vessels in their balance sheet because that's their accounting rule. They write everything they buy and rent as assets. That's the rule from their country. By the way, ZIM is a company from Israel, not from the US. The US. So you can rely on their assets. If you look at their revenue and earnings, you can see that last year in 2022, ZIM made 12 billion in revenue and 4.6 billion in earnings. Same for 2021, about 4.6 billion in earnings. And in 2020, they had about 500 million. Now, why that happened? And why ZIM can't continue in this way to make a lot of profits and pay this huge dividend of about 100%? Well, to understand this, you also have to understand how ZIM operates. So, you already know that ZIM is a shipping company. They rent most of their ships and provide shipping services to different countries. They ship goods from China to the US, to Europe, and other countries. And they make a profit based on this service. But this business depends on shipping rates. There is this Baltic index or freight index where you can see the shipping rates, the price they charge. So ZIM doesn't charge a price according to their desire. They have to respect those rates. And those rates went up a lot from 2020 to 2021 due to that pandemic. And they continued to 2022. And now they went down a lot. So the peak was about 10,000 and now the bottom is around 1500. Now compare those rates with their profits. You will see that in 2020 when rates started to go up, they make a little profit. Then in 2021 and 2022 when rates were high, they made a lot of money, over 4 billion in earnings. But then the rates have declined and also their earnings. You don't see in this image, you have to look quarter by quarter. And you can see that from 2021 to 2022, the earnings were the same, but then they started to decline from 1.7 billion to 400 million. And those earnings are expected to go down even lower because rates went down a lot. They're about the same level as they were in the past. 1400 in 2019 and now 1500. And if you look at ZIM, how much money they made in 2019 and 2018, you'll see that their earnings were with minus, and they made about 3.2 billion. Now, this business also depends on charter rates or the rent they have to pay for those ships. Not only on those shipping rates. So the charter rates now they are about 1200. You can see in this chart how they went up in the past in 2020 to 4000, and then they went down, and also the freight rates. You might say that they are about the same and they can make a profit, but it's not that easy because freight rates were about 10,000, and these charter rates were about 4,000. But now freight rates and charter rates are about the same. There is a little difference. That's why they can make so much profits. It's like let me explain in this image. Shipping rates now are around 1400, and the rent or the charter rates are about 1200. So what's left is 271 minus operating expenses minus depreciation, and you are left with zero or with minus. If you look at the representation, let me find it here. They already said that the earnings are expected to be lower next year. I mean in 2023. Where is that image? Here. They provided guidance for 2023. They said that they expect in adjusted earnings before interest and taxes about 100 and 500 million. Keep in mind that those are adjusted earnings. So their final earnings might be zero or minus. I also found the estimates from analysts, and they are not so great. They expect a loss for 2023 around 287 million. For the next year, 2024, minus 100 million. 2025, again a loss, and in 2026 they expect a profit about 96 million. But those are estimates. You can't rely on them. I can only say that this year will be bad for ZIM, and also the next year. But 2025 and 2026, I can't say that they are right, because this business depends on freight rates. You look at them, how they fluctuate. So it's like they try to predict the future supply issues or other problems, but it's not that easy. predict those freight rates. I assume that freight rates will remain above this level, 1500. It might go down to 11, 1200 or up to 19 or 2000, but not more than that level. Because nobody wants high shipping rates. All governments want to promote trade between their countries to grow their economy. They won't allow a shipping company from Israel to make a lot of money based on their trade. They won't allow that. You might see on the short term, like as you've seen in the past, high shipping rates due to different reasons, but they won't last forever. So you can make some money if you can predict those future events or major events like a pandemic. Now, the important thing is if you can make some money with ZIM. As I said, you can rely on their assets. You can't forget about their assets. And also on their dividend. As they won't make any money, they won't be able to pay a dividend next year. So those two things, you can forget about them. Now, you might make some money by buying cheap when the price is low and sell when the price is high. In that case, you can make some money. But the problem is you have to find that fair value and have a margin of safety and buy at the right time. If you look at my channel, I made some videos about ZIM, so I know something about this company and the industry they operate in. And from 2022, I said when the rates were at the highest peak, the ZIM will go down. Some people listened to me, others avoided or they did something else. And I said that the risk is the market cap can go to 2 billion or 1.5 billion. And that happened. Now, the important thing is to know the fair value of ZIM. As they expect no earnings, you can value this business based on their earnings. You can only value this business based on their revenue. Now, the problem is we don't know how much money ZIM will make. Because they might make 3.3 billion as they did in the past, or 6 billion as the analysts expect. But I'm not quite sure about their business model because as they rent those ships, as I said, most of them, if ZIM makes no profits, they might lower their fleet. So you might see lower revenue or higher revenue, about 6 billion. That we don't know for sure that. That's another problem you have to be aware of. It's better to wait 1-2 quarters to see how much money ZIM can make in revenue. And in profits, they won't make any profits because of those low shipping rates. But if ZIM makes 6 billion in revenue, then the fair value will be about 3 billion, around that level. So now the stock price is a bit cheap if ZIM makes 6 billion revenue. But if ZIM makes 3 billion revenue, then the fair value will be about 1.5 billion. But that is the fair value. You need the marginal safety. Let's say if the market cap goes to 1 billion, then you can consider this ZIM, this stock as an investment to take that risk. Now, there is another problem because ZIM will make no profits in the future. They will need more funds to operate their business. And they can raise more money by issuing more shares or by taking on more debt. They currently have 120 million shares, and they have the right to issue 350 million. So if they issue more shares, you get another risk, which is dilution. It's like you buy when the market cap is about 1 billion, but if they keep issuing more shares, the value will be even lower, 500 million. We don't know for sure. That's why this investment is a risky one. I can say that around 1 billion ZIM may be a buy, but it's not something certain. We don't know for sure how much money ZIM will make. ZIM depends on those freight rates and charter rates, which are expected to be low, as you can see in this chart from 2016 to 2020. To 2020, they were about the same level. So it's like you try to predict those little fluctuations. And you can also look at other companies because ZIM went public in 2021. You don't have so much data about it. You can look at another shipping company, Star Bulk Carriers, which has low PE ratio, about 3.3, and a dividend yield around 12%. And if you look at the stock price, went up in 2021 because of the high shipping rates, and went down a bit, about 40% from its peak. If you look at its history, you can see that this huge decline in the stock price, more than 60%. Of course, more than 97% all time. Now, if you look at their earnings annual, again in 2019 no earnings, a loss. In 2018 they made a profit about 58 million and 9 million in 2020. So this industry is not so profitable. ZIM might make 96 million in earnings. And if that happens, you can say that the market cap will be around 1 billion, 2 billion. I would say 1 billion if that happens. If ZIM makes 100 million in earnings. But it's a risky bet, this company. This industry is not so profitable as the tech industry or other industries. So it's better to avoid this company. As I said, you can take a small risk. I mean, I don't know how you invest. Let's say 2% of a portfolio if the market cap goes to 1 billion. But we also have to be aware of their revenue, how much money they'll make in the future based on the current shipping rates and those charter rates. If they can make 6 billion in revenue, then ZIM may be a good investment if you like the risk. But if you are a dividend investor, you can avoid this company, or a value investor. You can avoid this company because it's quite risky to invest in this company. If you have any questions, you can ask me in the comments anything you want. I hope now it's clearer about this company and the risk that it has. Thanks for watching.